More crazy news today for the cryptocurrency markets. A major lender just halted withdrawals. We also have the CPI data that came in, and we'll take a look at the Bitcoin charts. Let's get it. So the latest twists and turns in the FTX story, it seems that the Securities Commission of the Bahamas has taken action to freeze the assets of FTX digital markets. So that is a big escalation in this story. Regulators are definitely putting FTX in the crosshairs right now. JP Morgan warning that the FTX collapse will spark a cascade of margin calls across the cryptocurrency space. Remember, there are venture capital funds, there are market makers, there are all kinds of people who had exposure to FTX, whether through equity or the FTT token, or different companies who had their entire treasuries sitting on the FTX exchange. The potential for contagion risks are still very real from the fallout of the FTX collapse. Also, unfortunately, we now have news that the contagion has spread to BlockFi. I had been wondering what was going to be the deal with BlockFi and Voyager because FTX was bailing out both of these companies. Well, it now appears that BlockFi has put out a statement that they are halting withdrawals from the platform. This is super bad news for BlockFi. Probably going to be really bad news for the Voyager bailout as well. I'm sure we'll get details about that in the coming days. So just bad news all around from this FTX fallout. Terrible news for BlockFi users. I think after the earlier implosion of Celsius and Voyager earlier this year, those who were continuing to use things like BlockFi were definitely taking a risk, I think, at this point. But it's very unfortunate to see another centralized lender limiting withdrawals. Obviously, we hope that this opens back up in the future, that things get better, but it's hard to say. I mean, how much of BlockFi's money was potentially sitting on the FTX exchange? We don't know. Man, it's been an exhausting week with all this craziness going on, hasn't it? My goodness. Also interesting here, this is from Tom Emmer. He came out and he said, Gary Gensler, the head of the SEC, runs to the media or reports to my office alleged that he was actually helping FTX work on legal loopholes to try to obtain a regulatory monopoly. Now remember, BINANCE came out when they started selling their FTT token and they said it has come to our attention that basically FTX had been working behind everyone's backs to try and, kind of screw everyone over essentially. Is this what the situation was? How deep does all the corruption run here? Who was taking money from who in this situation? How implicit is the SEC in all of this? Hard to know. We're going to hopefully find out answers to that in the coming weeks and months, but right now this is just a theory. We will see if any of this actually plays out to be true or not, but holy cow, if that is true, the implications for it are crazy beyond belief. Now let's talk real quick about the inflation data. I know with all the craziness going on with FTX this week, you probably didn't even realize this happened. Well, what happened? It happened. The CPI, the inflation number for last month, came in at 7.7%. Now, previously it had come in over 8%. It was expected to come in around 8%, which means this beat expectations in the right direction, finally. Holy cow, this is actually really good news. This makes it more likely that the Federal Reserve is going to only do a rate hike of 0.5% instead of 0.75% in December. If that's the case, that would really, really add fuel to the fire of the Fed pivot conversation, and that we could see a slowdown in those rate hikes, potentially then leading into the rates actually coming down themselves sometime in 2023. So this is all potentially very good news, assuming inflation keeps falling in December, January, February, March, right? So we'll keep an eye on this story here for you. But the crazy thing is, if it hadn't been for all the FTX BS, man, Bitcoin would have pumped so hard today. In fact, we did have a nice pump for Bitcoin, Ethereum, a lot of the cryptocurrency assets. This is the S&P 500. Look at this, blammo, right over the 3,900 level, which had been the key area of price resistance. Closed the daily candle above that on this bullish news about the inflation data. Had FTX not happened, Bitcoin would probably be $23,000, $24,000, $25,000 right now or something like that. Instead, we get, devastation in the cryptocurrency markets. Now, before we get into the charts, if you need a great place for trading cryptocurrencies that has 0% fees on all spot pairs, 10 million users regularly using the platform, and you can get up to $4,450 in deposit bonuses by using the link down below in the description, then you should definitely check out Bybit. So if you're a trader, go and check that out using that link in the description. Now, Let's talk about this because this is insanity in my mind. This is potentially something that is game-changing here for the way the markets are going to behave in the coming months. This is the dollar index. Now, the dollar index has been on an incredible rally for basically a year and a half now. We have now, for the first time, had a significant close below the 100-day exponential moving average, which could really be signaling a potential breakdown in the dollar currency index. So we can see here we did have this little fake out the other day in late October, came back up, then we bounced down again, came back up to try and retest the 50-day exponential moving average, try and break over that, but instead it actually basically confirmed a bearish breakdown starting to come into play here for the dollar currency index, showing a potential loss of strength in the dollar, which would mean that people are likely to start looking at risk assets again, whether that be in crypto, whether that be in stocks or beyond. Now that's not going to happen overnight. We're not going to see everything pump like crazy madness, right? But with the inflation falling, with the likelihood of a Fed pivot, all this stuff becomes more likely. We could see the dollar index continuing to break down. Next major target here, 200-day exponential moving average. If the dollar index breaks under that, I think it's good night for the dollar rally here and potentially good morning for risk assets. Crazy thing as well during all this crypto madness, MATIC has been one of the craziest performing assets without a doubt. It basically recovered the entire crash today. So it got back up to about $1.10 today, which is basically the price that was trading at before the FTX crash happened, man. Holy cow, MATIC has been such a wildly bullish asset for the entire year, really. Of course, all the major partnerships and stuff, just incredible beyond belief to see the price action today on MATIC. Now let's talk a little bit about Bitcoin here because Bitcoin has been in a very bearish scenario, obviously. It's interesting when you look at stuff like Ethereum, for example, that we didn't actually hit a new low for the year for Ethereum. We only came down to $1,070, right? And the low of the year was all the way back down here at like $870. We're $200 away from the low at the low point of 2 days ago, right? Right now, we actually saw the daily candle close above that key area of price resistance and support here for Ethereum. If the next daily candle closed above that, that'd be very interesting to see. But Bitcoin has been showing a lot more weakness, right? So we came all the way down here to $17,600, $500, depending on which exchange you're looking at. Yesterday, the price blasted back up on that positive news from the inflation data, on the positive movements in the stock markets, but we only got as far up as 18,250 approximately, which is where we had key price support previously from September and October. So that means we came up, we saw this support flip into resistance and have a push down there. So look, we still have so much potential contagion to unwind here from FTX that I think there's still a lot of risk in the markets right now. We could still see a lot of stories continue to have some very serious negative impacts on the cryptocurrency markets. Bitcoin in particular has been getting smashed pretty damn hard. Ethereum holding up pretty well, MATIC holding up pretty well. Some different altcoins are really finding their own narratives here, but Bitcoin has been getting hit pretty damn hard throughout this process here, which is unfortunate to see, but it is what has been happening. Now, one interesting thing I want to share with you before we tidy up here is this. So, back in 2017, we hit our high water mark around $20,000. 364 days later, approximately, we came in for the low of that cycle. Now, it's interesting, right? So if we go back here and we have a look at, well, we had our all-time high for this cycle in November 2021. Now you fast forward 364 days, and that basically lines up with, our low that we just had right over here. Now, that is super anecdotal, but definitely an interesting thing to point out. Does that mean that the low's in? I have no idea. I think trying to call that bottom, it's a futile task. I just keep stacking sats, right? And everybody wants to get the accolade of, I called the bottom right. Nobody knows where the bottom is. Nobody knows what the next black swan could be. Nobody knows who has exposure to FTX that could unwind, hundreds of millions to billions of dollars of assets into the market. No one knows, right, how many Bitcoin miners are going to be forced to capitulate, because a lot of Bitcoin miners at $17,000 are running at a loss and they cannot afford to do that, right? They need around $19,300 on average to be making money on Bitcoin, at least breaking even. $17,000, a lot of miners have to turn off their machines and potentially dump their stock of Bitcoin into the market at the worst possible damn time. So there's a lot of stuff that can still going on here, but That's interesting, nevertheless. Okay, that's it for me for today. Subscribe now. See you next time.